Okay, so this is going to be the trade review for just the total week. Pretty decent week so far, especially given the fact that we have FOMC. We have a lot of speculative looking ideas on the table, and then we have some other ones that have been very clear, clean conviction, especially within financials for me as of lately. These rolling over was a very, very clear sign where I feel like I kind of knew and had a really nice feel for what was going on throughout all of the financial sector, and I'll cover that in a moment. But I was primarily short the uh, actual ETF, financials ETF, meaning XLF. And the reasoning as to why is because of just the general holdings. If you guys go to the general holdings, anytime you're shorting a sector ETF, you would want to look at most of the holdings, right? And I was initially looking at this thing on this low type bear flag essentially on your daily chart with exhaustion highs, right? Whenever you get exhaustion from the highs, really low volume leading into the end of the month, and then the new month kicks in. That's new month, new flows, new volatility, new cash allocation everywhere throughout the market, right? And we got actually a pretty big sell considering the fact that this was 55.5 million volume. And from that exhaustive looking top, we only had about 15 million volume traded from that high, right? And that was an inside bar. And this has just been making absolutely no progress. You get a very diminished spread on this 4-bar series of continuation attempts by buyers. And we had a major extension, if you guys are looking at this from the peg into the flag into the continuation, right? So whenever I'm looking at this and I'm looking at the intraday sessions, I'm scanning through the market into the close. I'm looking at the volume. I'm looking at the trading action happening on the retests. I'm looking at the tape. I'm looking at everything that I could get a feel for before I lead into the new week, right? And I had a very, very clear approach to this one throughout the new week. After seeing this 2-bar pattern on your daily chart of absolutely no buyer, right? We can essentially say there was no buyer just through a lack of continuation off of this area, right? If you go into your daily chart, it would just be on the 15. You would see a strong 15-minute orb candle, and then basically consolidation into the close, followed by a weaker close. If you guys go to the daily chart and you look at that Friday session, you had the same general thing happening here where there was absolutely no bid. It was more and less just consolidation throughout the whole trading day. And I don't really see that as any true strong retest. So what I was looking to do was I was looking for this thing to fail right through that $50 level come Monday open. And that's whenever I would be looking for a trade opportunity to then start thinking about taking out the liquidity from beneath, right? We have huge liquidity throughout this whole major gap up on financials. This was obviously through the financials earnings reports, so we can obviously tell ourselves with seeing this gap and then going over into financial and the equity within this sector fund that we can say there's a lot of liquidity that's still sitting and remaining down here, right? Everything was really choppy. There was a big lack of continuation. The only true strong pattern we had in terms of continuation was just this 2-bar series, which was the initial breakout. And like I said, that got really exhausted from the highs, right? So whenever we pull back down on increased volume and a healthier looking seller spread, followed by really tight minimal spreads on the retest of where this previous breakout was with a gap beneath, in which a much larger extensive gap that was caused through the earnings with a lot of volume down here, then that leads me to believe that we could obviously pull down into this major gap, right? So when we go take a look at the intraday action throughout this whole day, we can conclude that you lead into the new week, right? You have a new week, new open, new tape, everything, and you get a big fat failure right on your 15-minute candle, pretty decent volume, and then you get a 15-minute inside bar, low volume, and then it starts trickling down into that support with absolutely no buyer in sight, right? There was no buyer anywhere. This was more and less just sellers eventually pressing it down, more sellers taking profits, and this had a really nice continuation throughout the whole entire day, sub 50. This is whenever I started to short the lower highs. I bought into the 50 psych. I started to see a huge buyer that was previously absorbed off of this area, right? And then once we creep back down into that area and you don't see a bid once again that's willing to keep price afloat above 50, that's whenever I'm starting to look for obviously a short opportunity for the downside off that 50 psych, right? And then we go over into the tech equity now, right? Because it's a very important thing to understand the holdings, understand what the weighting is to XLF, and then be able to obviously see how it will be affected through the rest of these names, right? And we had a very interesting candle over here on JPM where I actually bought a dated short on the retest of the earnings candle high, right? So this is the same general concept, except we actually had a breakout failure from the highs on this one. So what this means is that you have a very liquid candle here with a very liquid range beneath you. Okay, you have a gap fill all the way down into the low 220s. And then you obviously have some of these internal gaps that are a little bit hidden, but as you guys can see, this is your trading session close into your new trading session open. So technically the gap was from 237 all the way up into 240. Okay, and then we never actually filled the entirety of that gap. So there was a little bit of a remainder on that gap. From the highs, we have exhaustive looking tops, right? There was no crazy volume other than throughout the earnings candle. We had a lot of internal distribution happening where this kind of slowly crept its way back higher all the way up into that earnings candle high. And then it had a big failure, right? Followed by a decent sized breakout, and it closed ever so slightly above. The next following day, and day one of continuation, what we got was a shooting star from the highs, decent increased volume on that wick. And if you guys go into your hourly or into your 15-minute chart to really boil down to the lower time frames to see where that volume was. A lot of that was a big time seller that was stepping in off of this 15-minute orb up here at the top of this range, right? And then we traded within that candle that was favoring sellers for quite some time, and we had that same general thing going on here with very low volume, very tight daily candle spreads, followed by a failure, right? And that is not a constructive uptrend. Whenever you see day one of continuation being a shooting star, followed by 3 days of digestion, followed by a failure essentially of where our previous resistance was, now once a resistance once again. This is essentially how the head and shoulders model actually plays out, but we're tying in obviously how much of an extension a lot of the financials have seen just through the pegs. Another thing that I would like to keep in mind here, guys, is that with large cap names, you always want to see heavier liquid ranges being tested in a very constructive way for a very strong, healthy trend, and these are not the case. Typically, with a healthy peg, what I'd like to see is a gap up, followed by collection of that excess liquidity from the earnings gap, right, which would be some sort of flag beneath the earnings candle within the gap, because you guys got to remember, not all orders are going to be able to be filled throughout that range down there, right? Because it's after hours trading and whatnot. So whenever you see failure from the upper ends of the chart and a lack of continuation and almost looking like a promising failure, and you have internal gaps beneath you to the downside, just for example, like right here, you have a tiny little one, and then you have a major earnings candle low to start testing into, then with a lack of constructive retest, meaning some sort of higher low that looked like this, then that would lead me to believe that with failure from the highs, we would obviously see some sort of draw into where the heavier liquid areas are in the chart, right? Just because there's a lot of volume there, there's a lot of volatility, so not all orders are filled. So that's JPM, and then a little bit of confluence. If we go into your hourly chart and we start taking a look at this, it's one big fat failure, right? And we obviously had internal distribution looking like it was playing it was playing slightly here, and then once we obviously crept up above the high, that's whenever it started to really show its hand, right? And then if we go into our hourly now, we actually had news, not news, but it was like a JPM press conference. It was a major like volume spike intraday, and what it was, if you guys go to the 15 or if you go to your 5, it was one big massive pop, but there was a big seller that was taking out a previous day high on this candle, right? And that gave me another opportunity to roll this thing because I was short from Friday into the Tuesday the next following week, and then I covered some of it, and then it popped, my position went red, and I just re-added what I scaled out of, which is just 1/3 of the position. This actually got my average even a little bit better. And once I started to see and take this just by the hourly print, just by 15-minute by 15-minute candle, or just your hourly candle, I saw one big fat wick, a gap to the downside, and then a lot of consolidation where this was incrementally eating away at the top of the gap's bid. And then once I saw that, and then I saw some other bank equity starting to get some failures like BlackRock. You had some other ones over in Goldman Sachs. Goldman Sachs was a very, very, very rollover looking. It was really favorable of looking like it would roll over, and I'll show that one in a minute. And all of these are very similar schematics in terms of being exhausted from the highs, getting breakout failures, or basically getting exhaustive looking highs is from a volume standpoint and daily candle spread standpoint. You go over to something like BAC, you kind of have a similar look over here with BAC. This is just simply in a supply zone on the weekly chart, guys. It's not anything too crazy over here with BAC. Sometimes you want to keep things really short and to the point, and that's kind of what BAC was. You go over to something like BlackRock, and we had a much more clear of a sign here whenever we're looking at just 1 day of continuation or just 1 day of a sell that could kind of juice up the XLF short. That being this day right over here, whenever we had a big time breakout with the external high sitting here at 1,068, and then we kind of had a daily flag channel look. And then from there, what happened was once we started to get the pop, the spread started to diminish, and then the volume started to really increase into a shooting star at the top of the trend. And then obviously from there, guys, like I said, you kind of just get rest on that day, followed by it's holding the level, holding the level, holding the level, and then it eventually just finds a big fat failure off of that level. And all we really needed was a slight little pullback here. And that was a really ugly opening area to the day, right? So with that being said, that would be all of the financials. If you go over into GS, this is the same general looking chart. You have a big time peg, no constructive higher low that's has a lot of volume, or it looks like it has a big floor to it. There was never any true market floor on a smaller time frame that was created within a lot of these pegs. So once we see the highs being taken, followed by exhaustive, very exhaustive volume from the highs, and then it starts to obviously slip underneath those previous highs, that's going to be a major issue, right? And then this started to fail the earnings candle high, and then we started to get some sort of 2 inside bar pattern here that led to continuation to the downside. And that's where I was looking for a push on most of these names, just into those pegs that are sitting beneath us. So do I think that this trade has a little bit more room in store for the downside? I do. Do I really want to fuck around and find out? I really don't. We're leading into FOMC. We're leading into a window where we do have monthly OPEX. We do have a time where there's a lot of liquidity elsewhere within the market. So whenever you do have gains on your hands and opportunity to scale out into weakness if you're in puts, or opportunity to scale into strength if you're in calls, and you see that the market has a lot of liquidity kind of in a different little area than you're trading, then you probably would like to do that. Options can be very dangerous if you're not scaling into the weakness or scaling into the strength, all right? Because then you'll eventually be scaling into the weakness if you're in calls, or scaling into the strength if you're in puts, right? I'm not promising any sort of crazy continuation happening over here. It's more and less just a multi-day trade. Once we started to see absolutely no bid, this was tying in with a distribution thesis actually within SPX. I took a small trade on SPX on the next fall on the if we go to XLF, this is whenever we had all of that really dry, low volume, no bid, no range, no nothing. So whenever I started to see the failure coming into December 9th, that's whenever I was like, okay, yeah, this makes a lot of sense in terms of looking for a sell within SPX as well, right? So all the way back on the 9th, what this was also kind of like, if you go into your hourly chart, guys, this was your SPY chart. Obviously, banks are very big within the S&P. And as you guys can see, we had a big gap all the way down into 604. And this was basically the gap territory that was looking to be defended, and it had a big failure throughout that Monday leading into the Tuesday. And as you guys could see, Monday and through Tuesday, you kind of had a little bit of juice from the financial sector to be able to push SPX a little bit lower. So that was a nice short side vehicle for the time being. You also had some pullback looks that were potentially happening within some tech names. And then I'll get on to the next trade now, which would be LRCX. So LRCX is a beautiful chart on your daily, on your weekly. It's a 1, 2, 3, 4 lower low accumulation. So each and every single time that sellers are essentially, it's not even sellers that are pushing it down here. It's more and less just buyers that are bidding beneath the previous lows, and there's a lack of demand essentially. If you're looking beneath the previous if you're looking at this general range and you absolutely see no buyer after a huge signal that was kind of being put in here, all right, and then you see pretty much low volume that is starting to like incrementally increase as you push into the bottom of the range, that tells us that accumulation is kind of happening, and it's all into just one big massive weekly level retest. If you guys zoom out and you guys take a look at this whole range here at 71.66, and it's not going to happen in a picture perfect world as a retest, but it will happen in terms of looking for the undercut followed by higher lows subsequently after the undercut. So what this means, guys, would be you have 3 relative equal lows or 3 lower lows of accumulation happening where the lows are essentially making no progress, and then you get one sharp undercut followed by higher lows after that undercut that takes out all of the liquidity of the first 3 lower lows. It's typically how these work, and it's not going to really it's not always going to be a picture perfect liquidity sweep. It could be a break and base for a few trading sessions. And then once everything is absorbed beneath all of these lows and everyone's stopped out and banks have their hands on most of the inventory that was sitting beneath those lows, that's whenever they can start looking for the markup. And then obviously there could be a lack of supply from the markup, because you guys got to remember, buyers are only playing from each low to each and every single new low. So whenever they're incrementally bidding low by low, they're getting this thing, they're using almost no fuel up here, but they're using much more fuel from the bottom ends of the chart, right? And they're getting cheaper prices. So whenever you have sellers pressing the gas on lower high, lower high, lower high, and then you have a buyer who's essentially just bidding this thing 0.32% lower from where the underlying was, then we have a huge issue here in terms of sellers and seller progress, right? So this was all just basically one big undercut of 3.5% on the underlying, followed by a rip higher, decent volume on the rip higher, and then you got a higher low within this gap. Then we started to get the signal entering into the name after we had the December 2nd candle and the November 29th. This is new month, new flows. We obviously have the dispersion happening within the overall market. I've been talking about this for a very long time, where NVIDIA, the big guy, meaning NVIDIA, cash is going to start rotating into these other names that have been building out very clean 3 or 4 lower low accumulations, or just really nice consolidations that are sitting within the range of a very bullish candle. And a lot of those being, you had MU, which was another one of these. You had a huge weekly chart of crazy amount of consolidation of 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 11 inside bars leading into this new week, all sitting on lower volume within a much heavier volume bullish candle, right? So we obviously can say buyers are outweighing sellers here. And that is kind of also playing a role over here, in my opinion, with LRCX. So MU is a position, LRCX was a position. This is just an earnings run up. Really nice opportunities over there. Schwab. So I had a short on Schwab for a little bit, but I said, you know what? I'm just going to cover this because it was a bad fill. We go into the daily chart. This thing was getting absolutely smoked in a 4 higher high distribution, right? Just as we talk about 4 lower low accumulation, We could talk about 4 higher high distribution now. It's the same general thing. The 4 higher high distribution is a little bit more rare, but if you guys look at the volume profile throughout this whole range on Schwab, we had huge sellers and mass capitulation happening in the banking crisis of 2023, right? And then once we started to cover just the general daily candle or the weekly candle spread here of this whole entire bar, we started to see the higher high distribution taking place from the preliminary area over here into then a higher low, higher high distribution, higher low, higher high distribution, higher low, higher high distribution. And when you guys think about this in the same general way of thinking about the 4 low accumulation, sellers are getting more for their shares whenever they're incrementally distributing above the previous highs, right? So they're selling, they're selling, they're selling, and they're selling at better prices and more optimal fills for them, while buyers have to move up their bid from where they previously bid from this range to now up a little higher, to now up a little higher, to now up a little higher. So now we can start looking for that to result in buyer capitulation, where you're getting the higher high distribution, you're getting a lot of effort from buyers to the point where buyers are saying the value here isn't even really too much. We're getting outweighed. And from the 4th higher high distribution, that's whenever you could start seeing a markdown phase potentially happening in a chart like this. So that's why I've also been short XLF and just the general financial sectors, because you have a lot of red flags and a lot of equity. This one honestly being the most. So I took a small stab at a short here, and then I just closed it for a small gain on this day once we started to lose the level. And I basically just took a back test. If you guys go into the 15, it was one big fat failure on your orb. And then it started to trickle its way down, and then there was no buyer, and you kind of had like a little 15-minute flag here. So I took a small position on the 15-minute flag, but the fill was super bad. So not anything too special there, and XLF had a much more optimal fill. Good premium, very slow moving trade, very stress-free. Can zoom out, look at the chart, and trade the chart rather than your emotions more than anything with a sector like this. But you have to be able to catch, obviously, some volatility to get paid, right? And it did have the volatility. So with that being said, we also lead over into what was another one? Oh, Tesla, or we'll go with Etsy here real quick. Okay, so Etsy, this is one of those charts where does anybody in the chat, if anybody's watching this, does anybody know why I took this or what was showing from the bottom end of the chart over here on Etsy? It actually reminds me a little bit of BA. So with Etsy, the reasoning as to why I took Etsy there's a few reasons, and this was more of a shares trade for me, but couple reasonings as to why I took Etsy was, one, you had a lot of consolidation here with huge volume actually coming into this range, and that was actually on one daily print. And the daily print and the spread, everything about this daily print didn't really show us too much. It was almost like a red to green intraday session, but a lot of volume actually poured in at the end of the day here. So there was a massive order, right? And sometimes those major volume candles leave us a little bit of a signal in terms of looking at this being preliminary accumulation, and maybe an undercut happens, and if that undercut shows another buyer with a rip back up above the range, then we could start concluding that this can be a 2, 3, 4 lower low accumulation happening. This kind of reminds me of LRCX as well. And basically what we're dealing with here is a lot of support generated off of like 51.45. Okay, you had a big amount of volume hitting down here on September 20th. That might have been an OPEX day, but so be it. It's still a ton of volume, right? And then you get your trickle down and it breaks, retests, and holds, right? And if you go to the weekly, it just basically had no progress from any sort of sellers and a lot of consolidation here, and within that consolidation we had this one candle that was sitting right here which is favoring buy side plus 8.5% on the underlying for that week. 29 million volume traded, and it was basically a breakdown failure and a break to displace beneath the previous support, right? So this is your previous buyer's bid range, and then obviously what happened was we tried to break down. We made a new low, they bought up the new low, and that's actually a gap, right? So this was a big gap. That's actually an earnings gap. So basically now we can conclude that this would be a weekly shakeout, right? So basically made a new low, and then it got swept out of that new low. Then it made a new high, a lot of volume behind that high. It trickled its way back higher up into a retest. So we had 1, 2, 3 trading sessions of a retest on top of the earnings candle high. We can now start preparing for a path of least resistance above us. And then it pulled back down into the actual earnings gap, just like what I talked about with financials, how I like to see constructive higher lows within a gap. And then it held the gap, started to rip back higher, and it had a lot of volume on the rip back higher, followed by 3 or 4 inside bars on really low volume, sitting on the resistance that it was tested for 3 trading sessions as well as the earnings candle high, right? So there's 4 tests here, 4 different trading, basically 3 different trading days, all testing and absorbing liquidity within that range at 55.50, right? And then we had 3 or 4 inside bars, 4 inside bars, and then we had the continuation bar, which is also technically on increased volume right here, right? So we had a lot of gaps up to the upside to fill. I didn't catch my fill here, right? But we pushed into the gap. We initially had a red flag of a candle, and then things got really tight of 1, 2, 3, 4, 5, 6 inside bars that are all sitting within the gap. If you guys go over to something that looks like D-Dog, it would be the same general concept where they're just absorbing the gap week by week. On D-Dog, it was day by day, right? So it's a little bit different of a time frame here. We actually had a lot of volume on D-Dog, so there was a big time seller that was absorbed throughout this gap, and as well as absorbed off of this resistance. So it's a little bit different of a level. Meanwhile, D-Dog, or I'm sorry, Etsy was just one simple bear gap, okay? And then once we broke through that gap, we started to see really nice continuation. So I was really prepared into the Monday. I actually shared this one on Twitter with you guys, but I was really prepared on Monday for this one to obviously see some sort of continuation out of this 6 inside bar base off of this bear gap. We had a gap above us to actually test into. And this is just a really nice continuation pattern here that was set up. So that was that. We'll go into Tesla now. Tesla was basically just a intraday trade. We'll go into the execution on smaller time frames. With Etsy, it was essentially just one big fat 5-minute candle that actually was testing into the previous trading session's low area, and it ripped throughout that all of these lower highs and started to look like a really nice strong setup, and I was filling within that momentum. So yeah, more of a shares trade for me over here just because the options were really spready off the open. I didn't get to fill onto Friday. So with that being said, that would be Etsy. I shared a couple other ideas in terms of Home Depot and Lowe's. I never took this trade because I wanted the 420 back test. What this one was, guys, was you had 3 continuation candles here, followed by a big wick on top of this range, and then it just traded on really low volume on a base above this previous resistance, okay? And then we started to knife through that, and the volume started to gradually increase as we started to knife through that range, right? So now we could see this gap area as well as this previous resistance as a big loss of progress from a buyer, right? So whenever you're looking at this and you're looking at buyers and you're just imagining, oh my gosh, buyers just got smoked here on sellers pushing this beneath a gap, you could start looking for the back test of the gap, and that's what I was looking for. So I stick with my system. I look for the back test of the gap because I want to take a little bit of a shorter expiration because I knew HD would sell this week. We never got the back test leading into the Monday open. It was just $1.50 beneath, and that was a really unfortunate trade setup because I was really confident. If you guys are EMA guys, what this did was it started to curl beneath those EMAs. The whole upper range had no willing buyer, so with sellers getting aggressive beneath this, and then there was a low volume, low inside bar beneath equilibrium of this trading session that was sitting beneath the gap, and now essentially just one big fat failure on your weekly chart. I would probably say that this thing pulls back, right? This is also, if you guys want to tie in a little bit of confluence, I can't believe a lot of people didn't see this one. So big weekly level that was sitting within confluence of also this daily gap as well as this resistance, right? So this back test here was huge, massive, and I never caught it. So that sucks, but it is what it is. We'll go over into Tesla now. Tesla, this is just one of them trades where it's really extensive. It's getting a lot of volume at the highest parts of the trend. If you guys know anything about distribution, you would know that a major increase in volume in only plus 3.64% on the underlying day, where you actually had a seller that was appearing within the tape over here, right? That led into buyers absorbing everything and leading into a squeeze out. What I'm basically looking for here is massive de-winding. There's a major over leveraging action that's happening here on as far as the options market goes within Tesla, right? This is at peak euphoria. Within peak euphoria, you're always going to get that setup where things liquidate immediately, and you can get these massive orders coming in that, you know, you have peak euphoria over here and something like Nvidia. You had so many times where things look so good and too good to be true, and sentiment was just so lopsided in terms of people being long, people over leveraging in their longs on Tesla. You guys could take a look at the skew in the options chain if you would like, for the OPEX, for the monthly OPEX. Everything that goes in with this chart, especially given the fact that we're getting these breakaway candles and you're getting a lot of volume that's gradually increasing with progress from buyers gradually decreasing, leads me to believe that a seller is here. And I think a seller is here, and I think it's coming somewhat soon. I'm not a parabolic short guy. I already told you guys, Bracco, he posted a really nice tweet on this one, and he actually brought this one to my attention. So today I took a stab on this one just because I saw a big tape shift, and I saw the speed gradually increase just a little bit throughout this range, and I saw somewhat of like a failure on your like 5 minute, and it started to look like it was failing to make a new high throughout this range, right? So I shorted this one throughout this range off of the opening print, and I started to gradually size into next week's expiration as we creeped up into where this one was initially sold from, and we basically had a higher low attempt on pretty low volume. If you guys go to your 15, it looked like it was stalling out over here, and then once I started to see the momentum start to pick up again, followed by like one more little flag, that's whenever I was like, okay, this could be the opportunity for the day. And then I sized up even a little bit more once I saw this, okay? And then I just basically had my risk. Now, after seeing this candle, I had my risk sitting at the opening print where my initial ads were. My original risk would have been the trading session high, right? And we were also sitting right off of the 480 psych. So once I started to see the order flow shift a little bit, and we started to see these intraday higher lows starting to fail, with sellers pressing a little bit more aggressively beneath the 480 psych, it started to fail the opening print. That's whenever I was like, okay, yeah, let's press the gas a little harder here and try and catch this thing to the downside, just in case it happens today, right? Which I didn't really expect this to happen today. But just in case it did, I want to be pretty aware that this could be a really nice risk to reward trade. So I targeted the overnight gap fill once I started to see the stopping volume taking place here down at these lows with a 5 minute hammer bar of 2 million volume traded. That's a very, very good sign to just simply cut the profits. It was a trade on next week expiration that ran 40%. I was only half sized. Initially, whenever I first stepped into the trade, I wasn't even half sized. And then once I started to get a little bit more confirmation throughout the intraday structure that's whenever I put in a little bit more size once I started to get some pretty decent fills that were sitting here off like 475, right? And then this thing bled its way all the way down into 457. Okay, so that was a decent little trade there, not anything too special. We'll go over into BA now. Or did I talk about my LRCX execution? Did I? Let's do a beer forecast live event for Saturday. I'm down. I can't wait for the book. Be on my shelf next to Wyckoff. I don't know if the book's coming out, man. Do you guys want me to... Did I cover the execution here on LRCX? If not, I can. We'll go over NVIDIA here real quick. Alrighty. So, with NVIDIA, do you guys know a few concepts that I'm looking at here? Does anybody know? Bark has earnings, Jay. I believe. I'm not a big fan of the chart. Yeah, they have earnings. Yeah, I don't know. The chart doesn't look that good. I don't like any chart leading into an earnings, man. All right, so what do you guys know what I saw with NVIDIA on the Friday trading session that led me to believe we were going to 128? Does anybody know? Don't be shy. Don't be ashamed to throw a shot out there. Hey, maybe I'll reward one of you guys with a Wyckoff book if you can answer everything right on this. That'll make people type. No book, I'm suing. Have your best lawyer. Man, I know. I know. Alrighty. Dude, you didn't reply to my tweet, you dick wipe. So with NVIDIA, first of all, we had NVDS. If you guys go over to NVDS, really big volume from the lows on NVDS, right? Which was also big volume from the highs on NVDA. Okay, and basically what happened here was it started to kind of put higher lows in, higher lows, and then continuations throughout those higher lows with a flat top resistance up towards 30 psych. If you guys go into your hourly, as you guys can see, most of the opening sessions with more of the volume were pretty healthy, right? And this just looked like one big healthy uptrend. If you guys go to your daily, it kind of looks like that accumulation base that's happening, where you started to get some pretty heavy volume, and that's just the same concept that you see over here with NVIDIA, but the volume profile on NVDS told me a little bit more. When you're looking at NVDS, there's always distribution happening at a previous high where you had a lot of internal distribution happening from that high. So a lot of distribution beneath that high happened. That was essentially a big fat failure because we had a lot of short exposure that went underwater on this August 5th bar, followed by just one big push down on top of this daily level within the NASDAQ, within NVIDIA, within a lot of this different tech equity that was putting everyone underwater, right? And this was just short side mitigation, if you want me to be honest with you. This was also leading into those holiday flows that were taking effect, and this started to see and creep back up into those highs, right? But you go over to something like NVIDIA, guys, and you just have a lot of choppy action moving forward throughout all of these ranges with support that's building gradually throughout 132. Okay, that's the first thing that I want to talk about. Second thing I want to talk about, if you guys go into the weekly chart, progress and everything about buyers up here was just bad. This was just really bad, and the earnings candle is what told everything. If you guys were bullish on Nvidia, that's crazy to me, because why would you ever, and why would a smart money would never, they can't even fill orders up here. There's not even enough liquidity for them to be able to build a position for some sort of holiday blow off top parabolic rally, right? So whenever you push your ways higher, you have lows that need to be taken, you have gaps beneath you, you have a big time daily level, you have support built above that daily level, you don't have any sort of strong claim of the previous all-time high with strong volume, strong constructive retest to show that a side is losing, right? There's no side that's necessarily losing whenever you're looking at the replay and you're looking at shit like this, right? There's no side, and it's honestly buyers that are losing, right? It's buyers that are just failing, right? Because they can't hold a bid pin above that 140.76, which is the rules that we trade around, right? It looked like it was for a little bit, and then it looked like it wasn't, then it looked like it was, and it looked like it wasn't. And when it looked like it wasn't, those are lower highs, right? When you find lower highs with the highest high having a lot of volume and then lower highs after, and the highest high having a lot of volume, and it's basically just one slight little push above the previous high, that's kind of what you would, that's kind of like a UT. It's kind of like your up thrust, and then you could start getting your up thrust after distribution, which I think is coming for Nvidia. If it's not, we're just going to get a lot of the last point of supply, and then it's going to start cracking trend on your weekly and daily. So this is all just one big fat failure. Okay, you're getting high, you're getting higher high, you're getting higher high, you're getting higher high, you're getting higher high. Oh, higher high, a lot of volume. Oh, fail. Now it's generating support from the lows with a gap right here. And then you start getting a lower high. Now we'll put these in red because that doesn't look too good. Lower high, now we're actually beneath the level, right? So whenever you go into your smaller time frames, you had a big fat failure here, okay? And this is what I was looking at on Tuesday. So now we're going to smaller time frames. We had a big fat failure off of the previous swing high on Tuesday, okay? We had that on Tuesday right here. And this is also a big fat failure within a gap, okay? And there was also a decent amount of absorption that actually occurred off of this because the orb was a buyer, and that buyer got smoked, okay? So when we're looking at this, here is your gap, okay? That was the rest of the that is fibs. Here's the rest of your unfilled gap, and as you guys can see, we had a strong orb followed by capitulation throughout the remainder of the day, followed by just simple lower highs and simple inside bars that are happening here on your daily charts, right? So this was two inside bars that were both tighter ranges, and this is an inside bar within an inside bar, and it was all just sitting beneath the bear gap as well as this level, right? So now we could start really concluding to ourselves that this is just one big fat failure on much, much, much higher time frames. If you guys want to go to the monthly, I mean, do you think this looks too good? And this is leading into the new December, right? We're only at December whatever. And sometimes you guys got to remember and take these things month by month or week by week. The weekly chart does not look good, and the monthly chart does not look good. To me, the daily chart never looked good, but people don't know how to look at a daily chart and be able to say, like, oh, that looks bad. I feel like over here they just get that hopium effect where they just think things are going to get the continuation higher, and that's just not the case. So, no, Gage, I'm streaming on Twitter, my guy, not in the Discord. So yeah, everything that happened here, we had a lot of liquidity to the downside. So once I'm looking at the Friday session, I'm like, oh, okay, this makes a lot of sense in terms of things starting to roll over. This is your overnight gap. What it did was it filled the top of the overnight gap. I'm just looking for one more hourly lower high on smaller time frame structure. This is your basically your big time candle that needs to be defended. And then if you go into the smaller time frames, it was all just sitting within lower high, lower high, lower high, with a lot of equal lows beneath us, right? So we can conclude that there's a lot of liquidity here. There's a lot of stop losses. There's a lot of pending orders to be filled from bigger institutions. And then you have a big time liquid level over here that's also in confluence, like this right here at 170, 127.72, right? So we had a gap beneath us. This is also that time where, if you guys know who Chem Carson is, he's a guy that I pay attention to from time to time. He talks about the dispersion happening in the market with like Nvidia and then things rotating out of Nvidia into other things. It has a lot to do with like the derivatives market and whatnot, but it's a really nice opportunity to just look at the chart, dial in on the chart, and be able to understand that, you know, things like this are free opportunity. Yeah. So it's a little mix of Chem. He's very knowledgeable, and just the chart, man. The chart just doesn't look good. Doesn't look good at all. So I'm kind of worried about this one. Target was hit today. And as you guys can see, once we saw a very fast tape actually over here within NVIDIA. We actually saw really nice opportunity to start thinking about sizing into the consolidation, into the close for a short to then go target down at the bottom of the gap. And we got continuation and one very speculative candle closure actually on the trend line. That's why you can't care about trend lines, because structure never broke. You guys got to remember, this is just one big weekly level that they're playing with here. They're toying everybody with it. So if like they don't care about a trend line. We're following big money. They don't care about a trend line. You know how many people are going to short the whole on Nvidia? You know how many people are going to say, "Oh my gosh, trend line failure. Trend line never take a trend line retest, buddy. Never do it. You have fucking 5 IQ if you do that." Then they're going to get squeezed out if we reclaim 132. So I don't think that this up here is the UTAD. I don't think it's the UTAD. I think it's the UT. I think it's the upthrust, and then we're going to get the upthrust after distribution post-January. And probably leading maybe a little bit more of a delayed factor into like February or March. I don't know. I don't know or care right now. The signs will be a little bit more clear as we lead up closer into that window. But all I know, guys, is that we had gaps beneath us. We had liquid levels here off the 130 psych. We had a big fat failure. We had lower highs. We had a change in character on the general chart, right? And then once you start finding, Joe, what stocks do you recommend to start buying from a fresh portfolio? I cannot make recommendations like that legally, my guy. If it were me, I am going to be buying dips probably. I mean, I haven't bought any commons in a minute. I have one speculative commons trade, and it's AVXL, but my average is a lot lower, and I sized up a little bit off of 750. That's speculative as hell. For a fresh port, I'm not allowed to say anything about. I'm not like I'm not supposed to do that. But I wish you asked me this like a long time ago. Bros was one of them. SQ, Roku, Tesla. You have so many of them. I would probably say I'm not that kind of. I'm not allowed to say anything, but yeah, I mean, I do like Oxy. I actually own this in my lot. This is one of my first buys. I think a dip towards January, towards the inauguration, preferably, in my opinion, I would say this thing is going to start finding a bid in the low 40s. And if it could start doing that, you're gonna find a nice opportunity for a commons trade here. I'm gonna be in a commons trade on that. Uranium stocks, is there any tickers that you have in mind? Uber, I don't really care for Uber. I don't really care for investing in Uber. Obviously, this is at one big, massive retest. If you guys look at like 61, 60, that's a big time weekly level. And it's just been creeping around that area. If you guys go into the daily, it's also one big daily gap. It's also actually an earnings gap that has a lot of volume on it. But I don't, the structure and everything about this chart, just it looks like absolute shit to me. But I think if like the time to buy it is actually now. I don't like the volume that's pretty heavy moving up and down into this support, but a lot of the volume was actually on the initial test of the gap. So this day had a lot of volume, and that was actually right before that news, I believe. Interesting. CCJ, I've been long CCJ plenty of times, man. I really do like this chart. As far as trading goes, would I trade it right now? Probably not. Do I think it looks good? Yeah. Do I think it looks great? No. Actually, no, I don't think it looks good at all right now. You're kind of getting that higher high effect of selling off each and every new high, and it's failing the previous supports and whatnot. But like, I don't know. I mean, this could be a nice trade. I like this thing a lot more throughout this range on this like breakthrough in the beginning of the year. You are a. I mean, I'm gonna post my next commons trade. I'm not saying you take it, but that's what I'll post. I'll post what I take. I still have Etsy commons that I bought. That's my most recent commons buy, but that's just like for a target up into 65. BA. We'll review BA and then I'm gonna wrap things up, guys. I'm not gonna share everything about this chart because I would say there's a lot of sauce involved with this. So I'm not gonna do that, but I will talk about just the simple dynamics of accumulation that happen with an undercut. So you still have F commons. I bought F commons when I was like 18, man. I don't think I ever talked about Ford commons unless it was like a very smaller time frame trade. When can you make a Discord for us to copy everything to a T? You will never make it doing that. No offense. Nobody will ever make it doing that. And probably never because I'm not a loser. No offense. Anyway, we have a big time chart here. If you guys go to the weekly, look at the consolidation. Look at the volume. Huh. Oh, that volume probably don't mean nothing. Probably doesn't mean anything. Heaviest volume since 2020. I wonder what that means. You guys could figure out basically. Oh, I gotta upload this to the Discord. I don't. All right, whatever. I'll talk about it. So some industrials were being liquidated, especially the recent leaders on those reports, and LMT smacked. MMM smacked. Ooh, gross. RTX, exhaustive top, gross. It's not really too gross now because look at that weekly, but I mean a lot of them. UPS smacked. There was a lot of big capitulating looking areas in the chart leading into the end of October. Guess what was happening on BA? A lot of this volume is in 2 trading sessions, by the way, guys. Look what's happening in the VA in the end of October. A lot of these names were catching a lot of volume. BA was catching that fucking volume while those other ones were selling. I'm sharing way too much sauce right now, but BA was catching that volume while the other ones were catching huge sell volume and major liquidations. Don't you think that that's actively just cash moving from? You could say, well, that's speculative, blah blah blah, blah da da da. You're never gonna get full confirmation, dude. So whenever you see this kind of volume, like I said, zoom out and take a look. Biggest volume since 2020 of June. And you get so much of a range being established, followed by an undercut. That undercut is the last bit of what it takes, and you get a lot of consolidation from the upper ends of the chart. There's no more supply here, and everything was bought here. All right, that's all I'll share. All right. Does anybody have any questions? Because I'm going to leave. Tornado. I wasn't trying to be an asshole. I'm just saying I'm not like I'm not like an alert guy. Like I talk about my positions in my Discord, but I don't like say like VTO, VA March call, blah. I mean, I give live entries, but I leave a lot of the management up to the people that I teach. And my Discord hasn't been a public thing in a very long time. I've not accepted members in for a very long time. Now, if you're a guy that's very dedicated to trading, maybe you can shoot me a DM and maybe I could work it out with you, but I don't know. Maybe if I get to know you and you seem cool and genuine and not an asshole, which I'm not saying you are. I'm just saying there's a lot of assholes out there. But yeah, guys, that was BA. Pretty crazy stuff, isn't it? The Matrix is real, and you start to see that with financial markets, how it plays out. It's like really weird. And how the timing works, everything. Whew. Crazy stuff, man. So yeah, that would be it for the trades that I've taken as of recently. Pretty boring, but I was in March calls here. I was in March calls here. I was in calls here. Is almost drug like when you're right? What? Can't wait for your big short coming up. I don't think I'm going to be sharing the entry on that. No shade. I'm not trying to gatekeep. It's just I need to see this bad boy do something. And I already know that I know something's coming with this one. I do. It's just a matter of waiting. But I have a window in mind that I am doing it. No, Tornado dude, I've had people like that in my Discord and they never survived. You gotta learn the skill, my man. You gotta learn the skill, my dude, or you're never gonna get anywhere. No offense. I'm not trying to be an asshole. I'm just I'm saying it for your own good. If you want to copycat people, not the way to go. You said it's like the Matrix, but when you can read and piece it together, it's crazy. Yeah. Yeah, not many people can, man. I gotta end the recording. I'm sorry.